Hello and happy March. I literally cannot believe that it is almost springtime. Feels like the first part of the year has flown by. Lots of changes on my end. But if you're watching this video, you're interested in the March mortgage update. We're going to talk about everything market related, applications, interest rates, turn times, also how to secure jumbo financing for a construction loan for as low as $4,500 in an origination fee. And $4,500 may seem like a lot for an origination fee, but I'm telling you, most companies, most lenders, most construction lenders charge 1 to 1.5% of your loan amount. So if you're doing a jumbo construction loan, which is over the loan limit of $726,200, 1% is at least $7,200. 1.5% is even more. If you're borrowing $1 million, that's a $10,000 origination fee. Our new jumbo construction loan would only be $4,500, and I'm going to go through that with you guys in the video. So stick with me. And so let's dive into the March newsletter. And just a reminder, WhatcomHomeLoans.com is my personal website. If you missed any other of the past mortgage updates or videos, you can go to my resources tab and find that. You can also find testimonials, get an interest rate, a lot of just great resources on this website. So, all right, let's dive in here. And if you're getting this, you're seeing this maybe on my social media platforms, you're a past client, you're a referral partner, a business partner, in some capacity, you know me, follow me. And so, as you know, I always go over rates, internal turn times, and appraisal turn times. Basically, what's the market doing? How quickly can we close on a mortgage? But I always give a quick nugget, and I want to go through the quick nugget. I always do it first to keep your attention. And this month is how you can finance a jumbo construction loan for as low as $4,500. So what I alluded to earlier, I want to show you the details. This is going to be very high level, and then I'm also going to post another video that really goes in depth on this jumbo construction loan and our other construction loan offerings. So right here is our two-step jumbo construction loan, allows loan amounts up to $1.5 million for construction of a new stick-built home or a renovation of an existing home. So you'll see here, we have a $7,500 flat construction loan fee. You're like, Dylan, what the heck, dude? You told me it was $4,500. You get $3,000 of that refunded as a lender credit when you come back and refinance and do the takeout loan with us, because this is a two-step. So you get the construction loan financing for 12 to 15 months, depending on how long your construction takes. And then you do a permanent takeout loan after that. You get $3,000 back when you come to us for that takeout loan. So $4,500, that is the lowest that I have personally seen in market. And if you are interested in this construction loan or any other construction loan products that we offer, go to Whatcom Home Loans YouTube. So youtube.com/Whatcom Home Loans. It'll also be all over my stuff if you want to take a look at it. This is my YouTube channel. If you scroll all the way down to construction loans, you've got a playlist of our 4 construction loans. We've got a lot loan, a renovation loan, a conforming stick-built loan, and then our jumbo construction loan. These are deep dives. Each of them are about 10 to 12 minutes. These are deep dives into the product, what you can do, what you can't do, what the fees are, what the process is, everything to just, you can go wild on all these videos. So let's pause here. Take a look at these. Let me know your thoughts down below. If you're watching this on YouTube, let me know your thoughts. Are you looking to build? Do you have clients that are looking to build? Is it because of lack of inventory? Is it because it's the spring buying season? Are you seeing material costs go down? And maybe that's why. Are you seeing more raw land come up? So comment below, because I love engaging with you guys, seeing what you're thinking. But comment below on the YouTube channel, and let's go into the rest of it. So that's our quick nugget of the month. And then scrolling down, rates. What a roller coaster. The Fed has made my job and every other lender's job extremely, extremely difficult. So if you remember a month ago, I was just looking at this newsletter on 2/3 is when I posted these. So I always do the videos on Fridays. So it's March 3rd, and then I send them out on Tuesdays. Rates on February 3rd, this 6.375 was 0 points, was no cost. Right now it's 1.875 in points. And I always do this at a $700,000 purchase price, good credit, 10% down, single family home, primary residence, like all the bells and whistles. So we've seen an increase of 1.875, not in rate, but in points. So if you have a $630,000 loan amount, that's your borrowed amount, 1 point is $6,300 because it's 1% of that loan amount. $6,300 in a one-time closing cost to get that rate. This is almost double one point. It's almost 2 points. So we've seen an increase of almost 2 points in the last month. So mortgage rate trend up, which we'll see here on the Freddie Mac. This is a great website if you just want to look at mortgage trends. So if you look back at, February 2nd, rates were right down there in the 6, and now they're up above the mid 6s right now. And usually they quote this out at a 1 point fee, which is pretty normal to what we're seeing. 6.625 is about a 1 point fee. So we're seeing this upward trend. Why is this? Why, God, we cannot afford this. We saw some pretty hot job reports and some inflation numbers come in, which sort of spooked the markets. We do have some pretty big news coming out next week on different inflationary numbers and things like that. So once again, this is a super, super volatile time, super volatile market. The good thing is when rates go up, what happens to competition and what happens to mortgage applications, which is directly tied to buyer competition, right? The more applications, the more competition in the market, which means more multiple offers. You have to offer more money for a house. So look at this. Mortgage applications. This was the big jump when I did the newsletter in January. We'll look at in February. 7.7% decrease, 13.3% decrease, 5.7% decrease. These are weekly. So we've seen a massive decline. Once again, there's a very easy correlation here. Why is that? From February 5th, when it went up, look at February 5th, right in here, started seeing rates go up. So it's not all bad. When rates go up, it stings, right? It makes home affordability, not as reachable, but it creates less competition in the market. So I just also shot a video on escrow and property tax statements. You'll definitely have to check that out on my YouTube channel because I've got 2 predictions for where this market is going to go. We're starting to see, when those rates climb, we start seeing less competition in the market. So everyone's kind of hoping for this spring buying season, and we'll see. You have to remember a lot of people are at a 2.75% rate, so they may keep those properties as rentals. However, those property taxes, at least in Whatcom County, we saw them increase about 12 to 16%. So what I think we could see is one, we're going to see a lot of rentals go up 12 to 16% or more. And we're typically on the college season. So you're going to see that in July, August, but also in Bellingham, you have to notify your tenants now 4 months in advance. So a lot of these tenants are going to get a notice that their rent is going to go up 12 to 16%. I think they're going to raise their hand and say, okay, I'm done with this. I'm going to buy. Listings, where are those coming from? Maybe this property tax increase will push some of these older demographics to let go of these properties. I think bigger homes that, people want to downsize. I think you could see some of those coming onto the market. But fingers crossed, we get a little more inventory. I feel like a lot of the inventory, at least in Whatcom County, is sort of picked through. So once again, mortgage rates, we've seen the trend up. Mortgage applications, we've seen down. I put down in green because if you're a buyer, it's better for you when mortgage applications are down because less competition. However, when mortgage rates are up, the home affordability and your monthly mortgage payment, it goes up, and that is not as good. Once again, marry the house, date the rate. It's a very cliche thing to say, but it's a good philosophy. Internal turn times a day all around. Reminder, get your file in, your credit income assets, get all that reviewed. We can do a Security Plus program, which I know I keep alluding to my YouTube videos. Check it out. It backs your pre-approval by $5,000 so that if it does get really competitive in the spring buying market, you're geared up, ready to go. Also, we've got our Buyer Booster program. That is a $2,500 lender credit to a future refinance. There's another video with all the stipulations on that as well. Appraisal turn times are looking really good, about a week to a week and a half. We're turning things around. So that's your March mortgage update. That's everything from rates, internal turn times, appraisal turn times, and construction loans. Once again, I just touched on the jumbo construction loan, but do check out our rehab conforming construction loan. lot loan, and rehab loan, because they're just awesome products. And I think a lot of people, given what rates are doing, lack of inventory, and all that, people are looking for raw land and to build. So check those out. And once again, I do weekly videos, so do subscribe to this YouTube channel. It really helps me just drive content, stay motivated to drive that content, and then you'll get pinged as well when I shoot out a new video. All my stuff, my goal is to keep you engaged, educate you. What's the market doing? What new loan programs are coming? What are rates doing? What's happening to home affordability? What's happening in the local Whatcom County market? All that good stuff. So we will see you next month on April's mortgage update, and hopefully we see rates coming down. Fingers crossed, and more inventory. All right, see you next time.